Before the charts. Before the strategies. Before the promises of freedom. There is always a human being under pressure. The market does not meet us at our best. It meets us exactly where we are. Tired, hopeful, uncertain, and often needing money more than wisdom. This video is not about getting rich quickly. It is about learning how not to lose yourself while learning how to trade. If I were starting again at the beginning of a new year with just $100, working a job, studying, paying bills, this is how I would do it. Chapter 1. Struggle always comes first. Long before Jesse Livermore became a legend, he was simply a boy who understood numbers better than comfort. He did not grow up surrounded by opportunity. He grew up surrounded by pressure. There were moments when failure did not mean disappointment. It meant embarrassment. It meant not being able to pay. It meant survival. This is something modern traders forget. Most beginners today believe struggle means they are doing something wrong. But history teaches us something different. Struggle is often the entry fee. If you are a student trading between classes, or working long hours in a restaurant, or managing a middle-class life with responsibilities, you are not behind. You are early, just like every trader who mattered. The market does not reward intelligence first. It rewards endurance. In Chapter 2, we are going to look back the mistakes we made last year. Every year ends the same way for most traders. Not with clarity, but with regret. Last year, many of us believed more trades meant more progress. We believed activity was discipline. Jesse Livermore learned this lesson early. And painfully. He discovered that being right often was not enough. Being selective mattered more. The biggest mistake we made last year was not losing money. It was losing focus. We jumped between strategies. We chased moves after they already happened. We tried to escape life pressure through the market. And the market does not reward escape. It punishes urgency. If you worked a full shift and then traded tired. If you studied all day and traded emotionally at night. You didn't fail because you're weak. You failed because you expected the market to compensate for exhaustion. Chapter 3. What changes this year? This year, we do not try harder. We try simpler. The great traders of history did not trade everything. They eliminated everything they did not understand. Jesse Livermore was known for doing nothing. For long periods of time. Not because he was lazy. But because he understood something most beginners don't. Patience is a position. If I start again with $100, I do not try to impress the market. I choose one market. One session. One idea. Because confusion is expensive. Especially for small accounts. When money is limited, clarity becomes capital. Chapter 4. The truth about small accounts. A small account feels heavy. Not because it is small, but because expectations are large. History shows us something uncomfortable. Legends did not begin with freedom. They began with constraints. Limited capital forces discipline. Limited time forces selectivity. Limited opportunity forces preparation. If you are trading with $100, your goal is not growth. Your goal is permission to continue. Survival is the first form of profitability. Chapter 5. Why most people fail with $100. Most people fail small accounts because they treat them like lottery tickets. Jesse Livermore blew multiple fortunes. Not because he lacked skill, but because he disrespected risk. Small capital demands humility. If you need the money, you are trading from fear. And fear always rushes. This is why your job, your studies, your daily life are not obstacles. They are protection. Chapter 6. Let's see how I would structure my life first. Before charts. Before entries. I would structure my life. Bills are paid by work. Trading pays in skill. Legends survived because they did not demand income from learning. If you remove financial pressure from trading, discipline becomes natural. The market respects calm participants. We stop here intentionally. If you agree, next we will continue chapter 7 to 12, strategy, risk, lot size, execution. My friend, this is shaping into something serious and timeless. And we move forward. Chapter 7, starting again at the beginning of a new year. A new year does not change the market. It changes the trader. History reminds us that great traders did not wait for perfect conditions. They waited for mental clarity. Starting again does not mean forgetting the past. It means using it correctly. If I were beginning again with $100 at the start of a new year, I would lower my expectations and raise my discipline. Chapter 8, Why Legends Traded Less at the Start. Jesse Livermore was famous not for how often he traded, but for how long he waited. Early in his career, he learned that markets move in cycles. And patience is what allows you to survive those cycles. Small accounts are not built by action. They are built by restraint. 1 or 2 quality trades in a session is more than enough for someone learning to survive. Chapter 9, One Market, One Session, One Idea. The moment you limit your focus, your results begin to stabilize. Legends reduced noise before they increased size. If you are working a job, or studying, or balancing responsibilities, your advantage is limited time. Limited time forces precision. Choose one market. Choose one session. Choose one repeatable idea. Mastery begins where variety ends. Chapter 10, Why Simple Strategies Outlive Complex Ones. History shows us that complexity rises with insecurity. Livermore did not succeed because of secret indicators. He succeeded because he waited for confirmation. If I were trading with $100, I would trade only what I can explain, without charts. If you cannot explain it calmly, you cannot execute it consistently. Chapter 11, Capital is a tool, not a scoreboard. Legends treated capital with respect, not excitement. A small account is not proof of failure. It is proof of responsibility. The market does not reward aggression. It rewards consistency. Protecting capital is not fear. It is professionalism. Chapter 12, When to Increase Size, and When Not to. In history, traders increased size only after trust was earned. Not trust in the market. Trust in themselves. If your emotions change when lot size changes, you are not ready. Size is added quietly, never emotionally. Chapter 13, The Myth of Fast Growth. Every new year, the same promise returns. Fast growth. Quick freedom. Easy money. History has never supported this belief. Jesse Livermore made his greatest fortune slowly, and lost them quickly when impatience returned. Speed feels productive, but speed hides mistakes. With $100, fast growth is not a goal. It is a temptation. The market does not reward speed. It rewards timing and restraint. Chapter 14, Understanding the $100 to $100,000 idea. Many hear this idea and misunderstand it. They think it is a promise. It is not. It is a discipline experiment. Legends understood something important. Capital grows when behavior scales, not when risk does. Turning $100 into something meaningful requires patience measured in months and years, not days. Anyone can double an account once. Very few can protect it repeatedly. Consistency is rarer than profit. Chapter 15, How Capital Really Grows. Capital does not grow in straight lines. History proves this. Livermore waited through long periods of nothing before acting with precision. Small accounts grow the same way. Flat periods are not failure. They are preparation. If nothing is happening, it often means you are doing something right. Chapter 16, Compounding Without Emotion. Compounding is quiet. It does not announce itself. It does not excite. Legends increased size without changing behavior. If your emotions rise with your position size, your account is ahead of your maturity. Risk remains constant. Rules remain unchanged. Only patience increases. Chapter 17, Drawdowns are part of the path. Every trader meets a period where nothing works. History is honest about this. Livermore experienced long drawdowns, not because he lost skill, but because markets change character. Drawdowns do not mean you are broken. They mean the market is teaching. The professional response is not revenge. It is reduction. Survival during drawdown is what separates traders from gamblers. Chapter 18, Trading While Life Continues. Most people do not trade from quiet offices. They trade from busy lives. After work, between classes, late at night. History favors those who trade less when tired, not those who force opportunity. One focused trade is better than 5 emotional ones. Your life is not the problem. Trying to escape it through trading is. Chapter 19, The Moment Everything Changes. There is a moment every serious trader experiences. Not excitement. Not celebration. Calm. Losses no longer feel personal. Wins no longer feel urgent. History shows this moment comes quietly. This is when trading stops feeling like hope and starts feeling like work. This is progress. Chapter 20, A Letter to the Beginner. If you are listening to this with a small account, know this. You are not late. You are not incapable. You are not broken. Every legend started smaller than their dreams. Protect your capital. Respect your process. Allow time to work. The market rewards those who stay long enough to be understood. Survival comes first. Growth follows naturally. Subscribe for more high-probability trading lessons.